she can't go on to Diary of the CEO and talk about how, have all of these massive opinions and say how, this is going to be changing, when she's missed out on the biggest boom in the last 50 years.
AI is the biggest technological boom. Ark Innovations ETF doesn't have any of that in it either. So that's Nvidia that's out the way.
You can't call something an innovation ETF when the largest revolutionary change in our economies, in financial markets, and in the construction of the S&P and the passive index is Nvidia, and you don't hold enough of it.
Hello and welcome to the Market Edge podcast. Today we're looking at the end and mourning the end of the Donald Trump-Elon Musk relationship and everything that went with it. We're also looking at the Ark Innovations ETF and asking, is this actually the least innovative ETF of all time?
Yep, is Cathie Wood pulling the wool over investors' eyes? I reckon she sort of is, but we're going to get into it a little bit deeper.
The Trump-Musk relationship drove markets for a long time, and now we've seen the end of it. So what does that mean for markets? We'll look at some charts and we'll look at some trading ideas which are going to help you get that edge in the markets.
Listen, you got to like and subscribe if you find value in what we're saying.
Okay, so let's look at the meme of the week to start off with. In this meme, for those who are not watching us, if you're not watching us, why are you not watching us?
Yeah, literally, we're beautiful.
Exactly. We're looking at Logan Roy from Succession. And the tweet says, Wall Street to Elon and Trump after the feud nukes $150 billion in value. And it's that infamous line of, you are not serious people. So where are we with this? This relationship, this story has driven everything in the last couple of weeks.
Yeah, quite literally. I think, it has been the environment of having a billionaire connected to the president, the whole Doge thing, people thinking that this is going to revolutionize the US, and then inevitably big egos fall out. But
now I'm going to give you a compliment here, because a few months ago when we were straight after the election, you called this. You said on this podcast, I don't see this lasting a long time. The egos, the personalities are too big.
I know.
And this is exactly what happened.
I mean, this is the thing about being right 100% of the time, is that you can look back on...
It must be quite hard for you to be right 100%.
It's really, really difficult, actually. I find it, I find it really...
Luckily, you don't have an ego with it at all.
No, I don't. But yeah, I think it's an interesting one because of the fallout. But the irony here is that Elon has been very consistent with things, because he sort of disagrees with the enhanced spending that Trump wants to do. And he's also said that he doesn't mind getting rid of electric vehicle credits, right? The subsidies that Tesla has lived off of until sort of more recently.
Yeah, but now these are the subsidies that obviously Trump has warned he's going to withdraw.
Yeah, but Elon has said previously he doesn't think that anyone should get subsidies because it distorts the market, right? So it's an interesting case with Elon, because although he is insane, he's a little bit dislikable. Yeah, he actually is quite politically consistent, and he's maintained that the US is spending too much.
Politically consistent, which is something that Donald Trump obviously isn't particularly.
Donald Trump's just a bit mad, isn't he?
Yeah. Do you know what is interesting around this is obviously he's now come out in the last couple of days and kind of backtracked a little bit. Now, he's obviously got some FBI warnings in there about some of the things he said. He said about the only reason the Epstein files haven't been released is because they're full of Donald Trump, which of course they are. Well, I mean, I could have told you that ages ago, right? We all know it. We've seen that before. So I'm sure that's true. But he's started to worry about it. He's backtracked a little bit. But what I loved was that now you get the close-up of his face in that meeting where he's standing behind Trump and Trump signing documents where he's got the black eye, and his face, the miserable look on his face the whole time. It's just classic. But this was going to happen. Now, what we've seen in terms of markets both love and hate this, right? Now, any sort of market commentator loves this because it gives us something to talk about. But from a trading perspective, it's just chucked a whole nother level of uncertainty on top of already uncertain markets, right?
To an extent, I think, we've had the key narrative of the tariffs, right? But then we saw that narrative sort of wane a little bit. When Trump announced 50% on the EU, the VIX only spiked to like 28. Whereas before, the previous tariffs, the VIX had gone up to 60. So that shows the narrative really, really waning in terms of how the market perceives it to be volatile, dependent on the level of surprise, right? And I think, it's getting to the stage now where there's got to be a new narrative to cause volatility to spike again. And I think we're going to see, small things like this happen. I mean, the S&P is trading at what? The ESE Mini this morning was what? 6,025 points. It's above 6K.
Yeah.
A couple of months ago, it was trading 20% lower, if not more. So the trend is up and to the right at the moment.
Yeah.
And I think the thing is that once you understand that narratives wane and narratives sort of flatten volatility, it's called volatility crush, it allows the path of least resistance to go up and to the right.
Yeah, and what this has also done is also taken away the story of the US economy, which, let's face it, the US economy, the numbers for the US economy have been pretty good recently. You know, inflation numbers are dropping back to around the 2% levels that they want them at, which is good. Unemployment hasn't been touched by all this huge recession talk. Unemployment hasn't been touched. Literally, it's continued to be steadily gaining. So
in the UK, it has, though.
In the UK, it has, yeah. Of course, that's a completely different story. We'll get to that in a minute. Plus, the big story that this has detracted to, which was actually my point, is the trade talks between Trump and, the US and China, which have been happening in London. And really, last couple of weeks, it's all the markets have really been caring about.
Oh, mate, I'm just like, get on with it now. Like, what more is there to discuss? Dull. Do you know what I mean?
Yeah,
come on. We've been here 2016 to 2018. Like, just get on with it. I'm so bored of listening to macro talking heads. The problem with macro as well and all of these narratives that pop up is it's pure subjective opinion.
Yeah,
Do you know what I mean?
It's like reading the front page of CNBC website for all your market
it's so
news.
Tedious, honestly. Yeah. But
Dull.
The thing is that none of them are translating any of these macro narratives into anything objective.
No.
So you can't track it through time. It's just like, this tariff's going to cause the market to go down. It's like, no, not necessarily.
No, exactly.
Do you know what I mean?
And actually, how are you helping me in my trade? I mean, let's get on to a point here of how mainstream financial media doesn't help anyone's trading at all. It's literally designed to say nothing.
Well, there's two things there. There's obviously, the fact that negativity always sells, which is why I hate macro. I used to like macro. I literally hate like 95% of the talking heads on macro now. Yeah. But also I think regulations...
I am one of those, by the way.
I hate you.
Also, I'll do that anyway.
Regulations do hamstring quite a lot as well.
Yeah.
So I think this is why they focus more on macro, because you can't actually get penalised for giving advice, if you like, if you're actually talking about macro.
Yeah.
That's why they love it.
Every time there's a figure out, they go, it could go up or go down. But if you listen to every single interview on CNBC, Bloomberg, whatever it is just someone saying it could go up or it could go down. Anyway, let's go to the tweet of the week. Now, this takes us to, we've got tweet of the week and we've got our chart of the week, which is going to kind of come in the same. The tweet says, Ark Invest frequently makes optimistic predictions and has gotten things wrong in the past. In 2021, they predicted Tesla shares would be at $7,000 by 2027. Mm-hmm. Currently, they're at $320 odd. And in 2020, they thought Nikola Motors would be worth $50 billion by 2025, and Nikola Motors is bankrupt. For people that don't know, or if you live under a rock, what is Ark Invest?
So Ark Innovation ETF is an ETF created by Cathie Wood. It's got $5.5 billion under management, 13% of its weighting in Tesla. Second is Coinbase. Third is, I can't even remember now. But effectively, there's no AI in it, right? So this is the point that we're getting into.
So there's no AI in it. Now, AI is the biggest technological boom there's been.
And she might make the case that, okay, we're investing in AI via being long Tesla in the main. However, there are more concentrated bets to make there, such as being long Nvidia. There's no Nvidia in the ETF. Which is insane. It's like this. You can't call something an innovation ETF when the largest revolutionary change in our economies, in financial markets, and in the construction of the S&P and the passive index is Nvidia, and you don't hold enough of it, or even any of it.
Last week, we obviously spoke about quantum computing. We were talking about how that's the next revolution in tech, AI, whatever it may be. Now, Ark Innovations ETF doesn't have any of that in it either. So that's Nvidia that's out the way. That's all of those perspectives.
It's nowhere near concentrated enough relative to how hot the theme is, basically.
Yeah.
Of course, you can say that Tesla's got AI if it's doing self-driving and all that, but that's even more robotics, I'd say, which of course is connected to AI. Yeah. But it's just this. The thing is, and I think I've mentioned this last week as well, is that you want to be selling the pickaxes during the gold rush, right? So the actual better bet is to be long the companies making the chips, the graphics cards like Nvidia, right? Coinbase, fine, but I think relative to the massive...
Where's the innovation in Coinbase? What's the...
It's a prime broker at the end of the day,
exactly.
And I think compared to the innovation in AI, I think that should definitely have been at least reduced to replace for the AI narrative. So it's not an innovative ETF when you consider, and we can look at a chart actually of Ark.
Yeah, this could seamlessly go into our chart of the week section.
Yeah, this is probably the best place to look at this. So it's doing well, mainly because Coinbase is up and Tesla is up, which is fine. However, it would have done better over the last 2 or 3 years after that, insane pandemic mania.
Yeah.
If we'd have had Nvidia in there.
Yeah.
You would have had, a far smaller drawdown. If you'd have been concentrated in Nvidia, actually, it probably would have been up. And so she can't go on to Diary of the CEO and talk about how, have all of these massive opinions and say how, this is going to be changing, when she's missed out on the biggest boom in the last 50 years.
So during our production meeting, a little bit of BTS on this, is we were speaking about this, and basically everyone had the that Cathie Wood, who's the owner of Ark Invest, which generates Ark Innovations ETF, she basically went on the Diary of the CEO. Now, that podcast is known for him being quite hard-hitting quite a lot of times. This was like a 2-hour advertorial on why you should buy the Ark Innovations ETF, right? She basically had an advert for an hour and a half or however long it was, which was a joke for an innovative ETF which doesn't have any innovative companies in it.
Well, it has got innovative companies. It's just she's missed out on the biggest innovation. That's also that kind of, I guess in those terms, it disregards it as being a massively innovative ETF. You've got to have some active management in there if you're proposing that you're a very, very high beta ETF and you're concentrated amongst tech innovation.
Yeah.
When you've missed out on it, it just, it undermines everything that you're basically saying then.
Okay, let's move on to the trading idea. It is Tesla, shockingly enough. The key point in terms of we're talking about innovation and how Tesla moves forward, it's autonomous driving, right? Mm-hmm. That's the future for Tesla and how autonomous driving goes ahead. Now, it's already been used in San Francisco?
I think it's LA. They've got Waymo and they've got Tesla as well.
Autonomous taxis, basically.
Yeah.
So where does the innovation lie for here, and what is the point that drives Tesla higher from these points? What gets us back up to 480, 90, whatever it is?
Well, I think interestingly, it's the relationship between their recent Q1 earnings and also its composition as part of the S&P 500.
Yeah.
So we've seen that net income was 399 million for Q1. That was, let me think of a better term than I was going to use. Really, really bad. However, it's still one of the largest market cap companies in the S&P.
Yeah.
What you have to look at here then is any improvement then in forward guidance is going to cause a massive inflow of capital from here into Tesla, purely because of how it would have to be seen by the market as perhaps having an increased multiple, as you say. You've then got, the robotics arm, you've got the self-driving taxi arm. That adds a multiple in itself, especially if there's a good rollout at good margins too. I don't think the market cares necessarily about the vehicle subsidies, mainly because it's been profitable outside of them as well for a couple of years now. So I think the way that it's going, and from a technical perspective as well, I love moving averages because they're effectively systematic levels. Algorithms would look at them and say, oh, we can ignore all the narrative, but this is what the moving average is. Act on that. The 200 dailies just hit an all-time high, which I quite like as a measure of the direction of trend. It's only just hit an all-time high, literally probably by about a few ticks.
Yeah.
But still hit an all-time high.
The public persona that he will now focus back on Tesla and, his businesses rather than focusing on government work, right? That gives a lift. That gives a lift for one perspective. The other side is there's more competition than there's ever been for Tesla. And I want to talk about BYD, right? So BYD are one of the fastest growing car companies in the world, I'd say, at the moment. They're springing up everywhere. Dealerships are springing up everywhere. There's a focus there as to is BYD just a budget version of Tesla? It's not really. It's a decent version. The competition is going to be growing, right?
Do you know what the issue is with BYD? Is that there's always going to be distrust from the US, which is the largest consumer in the world, that all of these Chinese cars.
BYD is a Chinese company, by the way.
Don't have bugs in them. That is the biggest risk for BYD, and why I just don't. And also the fact that they can't be listed properly in the US capital market outside of an ADR means that the liquidity for the stock isn't that great either. However, I would say, that is the biggest risk. That China even built a trade center in Africa, and then they bugged the hell out of it. They've done it in the UK as well. And so they had parliamentarians that were Chinese spies. There is absolutely no way, and also they did it in solar panels recently too, which is a weird thing to do. But there is no way that there isn't a big security risk there from BYD cars being in the US, which cancels out, in my view, a large proportion of the demand base.
Well, and this is not even a Trump thing, is it? It's probably it's expedited with Trump and it's accelerated with Trump. But any US administration is going to be wary of this sort of technology being freely rolled out across the United States.
Do you remember when you see bumper stickers of people saying, I got this before I knew Elon was a fascist or something like that? Yeah. I've seen lots of sort of liberals now saying, oh, so he's one of the good guys. From that low print on the net income measure, I reckon they're going to see that, he's criticised Trump now. They're warped, insane heads. And now going to be like, I can go buy a Tesla freely again.
Nazi salute's been kind of forgotten, isn't it?
It wasn't a bloody Nazi salute is why. Jesus Christ, honestly. When you're that autistic, right, like Elon is, he's definitely got autism. He doesn't know what he's doing. He's got the worst social etiquette I think I've ever seen from anyone. He just kept him in, for God's sake.
Okay, so from that perspective, I think Tesla looks all right. Plus, it's still one of our picks for the year. So happy with it.
Absolutely. I think it's always good to go against the old crowd, and that's what we did at the start of the year. Tesla and Walmart, strange one because one's consumer discretionary, one's consumer staples. I quite like it. It changes the environment.
Same. On that note, I think it's probably best to leave it. Do you agree? Do you disagree? Do you agree with Ark Innovations? Take a look at Ark Innovations, by the way. But let us know. Write a comment. Tell us we're idiots. Tell us you like it. Say what you like. Like, subscribe, and we'll see you next time.